welcome back to my channel. So in this video I'll be considering the IPO of one company that is open for subscription currently and will close for subscription tomorrow, that is on 7th March. So the IPO will be considering of JG Chemicals Ltd. So it is coming with a book value of 251 crores. It comprises of a fresh issue of 0.745 crore aggregating to 165 crores and offer for sale of 0.39 crore shares aggregating to 86 crores. So it is a combination of both a offer for sale as well as a fresh issue. And the IPO will actually the allotment is expected for this IPO on March 11th, and it is expected to be listed in exchanges on 13th March, Wednesday. And price band for this IPO is between 210 to 221 per share, and the lot size for the application is 67 shares, and the minimum amount for retail investors is 14,807 shares. And Centrum Capital, MK Global, and the Keynote Financial Services are the lead managers for this issue, and the Kfin Technologies is the registrar for this issue. And regarding the face value of this issue, it will be 10 per share, and the anchor investor percentage offered is 30% for this issue, and QAB shares is the 20%, HNA percentage 15%, retail share offered is 35%. And regarding this company, JG Chemicals Ltd was formed in 1975 and is a zinc oxide manufacturer. It actually uses a French process. The company produces more than 80 grades of zinc oxide. So the zinc oxide is actually used in the various industrial applications like ceramics, paints and coatings, pharmaceutical and cosmetics, electronics and batteries, agrochemicals and fertilizers, specialty chemicals, lubricants, oil and gas and animal feed. And the company has 3 manufacturing facilities in Jungalpur and Belar, both in Kolkata, West Bengal, and Naidupeta and Dhenua district, Andhra Pradesh. Naidupeta in Andhra Pradesh is the largest facility owned and operated by the material subsidiary. All the manufacturing facilities are having ISO 45001 standards and ISO 14001 and ISO 9001 standards. The company has a needs of more than 200 local and 50 international customers in more than 10 countries, and it has a good customer base. And they, as on December 31, 2023, the company employed 112 permanent employees over 100 workers and apprentices. And regarding the financial performance of this company, so in FY21 they had a revenue of 440.41 crores with a net profit of 28.80 crores, and it increased to 623 crores and the profit after tax of 43 crores in FY22. The revenue further increased to 794 crores in FY23, and the net profit increased to 56 crores. And for the first 9 months, the revenues was 491 crores and the profit after tax 18.51 crores. The company marked a dip in net profit and revenue in FY24. So actually the management is saying that is a one-off factor, and the demand is expected to increase in future, and they are already seeing signs of demand recovery in future. But considering the good growth, there is a reported revenues from 440 crores to over 794 crores in FY23, and profit after increasing 28 crores to around 46 crores. I will not be surprised if the company can actually post higher revenues in future, because to a large number of customers it has in future already in different countries, and the large number of industrial sectors where they serve their products. And regarding the performance indicator, the EPS after the IPO would be around 11.01, and before the IPO it is 13.6. So the company would be coming with a price earning multiple of around 20 times its earnings at the price band of 22.21 per share. So it would be reasonable for a company that is actually having good growth from FY21 to FY23. And the promoters of the company is Suresh Junjunwala, Anirudh Junjunwala, and Anuj Junjunwala. And regarding the subscription figures till the end of the second day, the QIB segment is oversubscribed by 0.46 times. It is expected to become the last day. HNI segment is oversubscribed by 10 times, and the retail segment is oversubscribed by 8.73 times. So I am actually expecting at least 15 to 20 times subscription in the retail segment and more than 10 times in the QIB segment. So, and regarding the review by the broker Dilip David and the website they mentioned that it is the largest zinc oxide manufacturer with enjoying a virtual monopoly. They have a good long-term relationship with the end users and gets more revenue, 90% revenues from the repeat orders. And turmoil in zinc oxide prices globally attributed to a degrowth in top-end model in H1 of FY24. The company is witnessing reversal in trends and is confident to be back on track. So, as per their report, the issue of pricey based on FY25 for annual earnings. It is worth investing for medium and long-term rewards, as per their opinion. And as mentioned by me earlier, is the largest zinc oxide manufacturer in terms of production and revenue for zinc oxide manufacturing the French process. which is the dominant production technology for producing zinc oxide, and it is adopted by the major producers in America, Europe, and Asia. And the market share of the company in the zinc oxide is around 30% in FY22. It sells over 80 grades of zinc oxide, and among the top 10 manufacturers of zinc oxide globally. Since the incorporation, the company has expanded the business and scale of operations and has grown into a large diversified zinc oxide player with a global footprint. Its product caters to wide spectrum industrial applications, including the tire and rubber products, ceramics, paints and coatings, pharmaceutical and cosmetics, electronics and batteries, agrochemicals, etc. So it has a decade of legacy, over 4 decades in manufacturing business from its benefits and experience in catering to wide range of customers. So it has over 200 domestic customers and 50 global customers in over 10 countries. And in India, tire industry accounts for more than 70% of rubber consumption, and that companies and tire industry are larger consumers of zinc oxide. And along with being suppliers to 9 of the 10 of the top global tire manufacturers and to all the top 11 tire manufacturers in India. So it has a good demand from the tire industry for their products. It also supplies to leading paint manufacturers, footwear players, cosmetic players in India. And it actually also has an entry barrier, because it is products is customized as per the industry specifications. So high cost of product development is also there. So there are not new companies are unlikely to many new companies are unlikely to come up in this segment, zinc oxide. And they have an aggregate installed capacity 77,040 metric tons per annum, spread across their manufacturing facilities in Jangalpur, Kolkata, and 90% in Andhra Pradesh, and they have 120 employees in their payroll and 47 contract workers. And after the issue paid up capital will increase to 39.19 crores, and the company is trying to command a market cap of 66 crores. And regarding the, as mentioned by me earlier, it posted a decline in top and bottom line in the FY24. The management clarified that due to turmoil in zinc oxide prices globally, it marked a temporary setback. But the company is actually witnessing the reversal in trends, and it's expecting to achieve stability in the growth in margins. And as per it has good relations with end user customers and get 90% repeat orders from them. So this is cyclical for the business, and once in the 5 years the company faced the issue, the company just pricing power has curtailed a drastic fall in margins. So altogether, the company's management is expecting good turnaround on the demand for the zinc oxide products from the repeat possibility of repeat. They will be likely to get repeat orders from their customers. So the revenue will increase in future only. So based on the price, the issues based on the EPS, the companies will be coming at the price on a multiple around 20 times, which appears reasonable for the company that is actually having good growth for 3 years till FY23. As per the peers, it is mentioned Dow Jones Global Wires, Nostell and Asia Industries as the peers. And but I will say that this company is unique in this business, because it is one of the very few manufacturers in zinc oxide being listed. So it is likely to get good listing gains. But we need to see the subscription figures, and the current grey market premium is actually showing a premium of 50 rupees. So we likely to list at around 250 levels. So regarding the review by different brokers, I mean most brokers have as many as 10 brokers has a subscribe rating IPO, and one has a neutral rating. So considering that is actually a monopoly market share in the zinc oxide segment, is actually have most of the tire manufacturers customers, and has products. These products actually are used in different industries. I am planning to apply for this IPO, and I am actually expecting good listing gains. I am actually expecting a listing at around 250 levels. If you are able to get at much lower levels, it will be good. But long term prospects look good for this company. I am actually expecting the higher targets of 300 to 400 in the future in 3 to 4 years, based on the earnings growth reported by the company. So if you are also convinced about the future prospects, you can also consider investing.